Welcome back from lunch. Thank you very much. Our next speaker is Mr. Chiheb Mahjoub, founding partner at Inuo Strategic Impact, and he's going to introduce to us his vision of investing in infrastructure. Mr. Chiheb Mahjoub, the mic is yours.
Good afternoon. I am pleased to be with you this afternoon in Peace City World Congress in Salamanca. I'm sorry for not being physically present here, but I am really glad to speak and talk about important topics for your projects and around infrastructure funds and smart cities trends and in 2023. First of all, I just want to highlight the topics that I will cover during this conference. First of all, it will be around smart city and infrastructure finance, on how those are linked. You have seen maybe before this presentation some bankers and specialized investment managers pitches, and I would like to maybe to summarize it as a whole. The second part of the presentation will be around infrastructure funds, history, global overview, actors and performance trends, and also a zoom on the energy and transport and smart cities topics. And then just to highlight what it is, in fact, in an investment in a smart city infrastructure fund, maybe a very short case study. First of all, as a reminder, you know better than I do, the Sustainable Development Goal roadmap, in fact, issued by the United Nations. The topic is really to show maybe through this slide how global drivers of urbanization were and how they have evolved during, in fact, the last 30 years, maybe, especially when the increased urbanization has put everybody under pressure of sustainability focus, and where public sector has also called the private sector in order to help, in fact, during within the transformation of cities, in order to be able to finance correctly, in fact, those topics. And it is effectively the SDG 17 private sector participation document that is maybe highlighting this. And then effectively the coming of the technology-led citizen services with a lot of complexity, a timing of investment which is different, and a mix of technological infrastructure that is complex to finance. So all this has really brought, in fact, a certain complexity in the build-up of smart cities. In terms of financing challenge, so there are effectively two or three main items I would like to highlight in this slide. Is that public infrastructure financing challenge is effectively around revenue models beyond exchequer funding. What these type of investment will bring, in fact, as revenues and value capture and value of the money for money, in fact, issues. The second important topic that public infrastructure financing has to solve is really build financing structure, build procurement structure, because it's generally a huge project. And this is, in fact, the basic, in fact, of infrastructure funding. On the other side, smart city financing challenge is maybe more complex, as I've said, with increased technology components, with a shorter term infrastructure, with effectively variation of lenders and investors which are motivated by those projects, with sometimes revenue models which are not clear between who owns the flow, who owns the business, how the cash flow and the cash flows are handled and distributed to the players. And effectively, there is one very important topic, which is the data and the IP asset that is created around a smart city. how this is valued, who owns it, and how this is funded. The classical approaches, in fact, on infrastructure finance are the following. So there is, in fact, a first step where it is quite important to understand projects and value, understanding the business models, the value generated, in fact, by those projects. Second important decisions to make is really to put a good distribution between public funding, private funding, and how the value is monetized. And then the third step, in fact, before starting, in fact, effectively a project, is really to build, in fact, a relevant procurement and delivery method around operating contract, joint ventures, long-term leases for sometimes for real estate assets, the PPP topic that you heard about, in fact, this afternoon. Is it a model with franchise? Is it a model of privatization? So these are the key questions, in fact, during a project like this. And in order to supply, in fact, finance to that, there are many sources and complex sources. First of all is really the funding, which is effectively what the government and the exchequer financing and the government funding and the grant funding are providing, without maybe a major issue on value created. It's the public funding of the smart city or of the asset. The second part of it is the debt, and a lot of tools of debt, either senior debts, bonds, export credits. In fact, bankers are quite specialized on this. And then the hybrid, in fact, financing, where you have a combination of debt and equity, where you can effectively use vendors financing, like big vendors like IBM or Cisco, for example, could enter those schemes. Some alternative lenders, mezzanine finance, which is costly but very used in the LBO industry. And what is effectively our topic today, the infrastructure funds. And you will see that it is a huge industry where there are many players and many opportunities. Just in order to introduce it, in fact, the infrastructure funds are today managing $3 trillion among the $3 trillion of infrastructure investment. 23% of them are from the private sector and from the infrastructure fund. It is a very fast growing segment, and between 2019 and 2023, 18% of increase. And what is interesting also is that on the public side of it, there are recovery plans, rescue plans, which are helping and being a very, very supporting environment. So the topic is a hot topic and interesting for your project here in Salamanca. Just in order to have some history, the 3 stages of economic transformation led to maybe 3 types of phases in the history of the infrastructure financing. The first phase is really to develop primary infrastructure where there are basic needs to facilitate and boost economic development and urbanization, where the objectives are ensuring a minimum level of development, eradicate poverty, and this has happened in the 19th and 20th century. And starting from the 70s, which is the globalization era, a lot of infrastructure has been really built around highways, ports, airports, Silk Roads, data centers, and in order to develop world trade and develop, in fact, capacities through all continents and countries. The third phase, which is effectively from 2010 and all which is related to the climate and the ecological and the sustainability topics and digital transition, came in order to finance EV, circular economy, recycling, smart cities, and in order to reach zero carbon, to develop social responsibility, and to reduce the time of works, in fact, of all time. And some countries are in the three phases. Some countries are leapfrogging, sorry, and especially the emerging countries, where on a lot of topics like sustainable energy, local grids, ecological solutions, a new business model are implemented, like telecom was implemented with the surge of mobiles. In 2021, these are the figures. Infrastructure expenditure is expected to reach 3 trillions, of which 700 billion shall be private. And the private infrastructure market is really a market which has a curve of growth and CAGR, which is quite impressive. And if you look to these graphics, you will see that effectively there is an evolution on where the infrastructure is invested in, effectively in the transport, roads, water. That is, in fact, quite classical topics, especially for developed countries and Asia. But on the other side, a lot of investments in energy, in telco and technologies became more and more the trend, in fact, of the last years. The total private investment in infrastructure in between 2010 and 2019 was more or less an increase of 100 to 150 billion annually, and will stay at a very, very high level in the next years. And just to give you, in fact, also an idea of the equity asset of the 50th largest infrastructure fund managers, in fact, of this world. As you know, certainly the infrastructure. Good afternoon. I am pleased to be with you. The other important also players that are there is that the 50th largest institutional investor committed over 395 billion to infrastructure in 2020, and you find here the institutions that are really quite diversified. You have from Canada, two major players like Canada Pension Plan Investment Board and Caisse des dépôts et de placement du Québec. Abu Dhabi, in Germany, Allianz Global Investors. There are Chinese, in fact, institutions also that are very present. And the important thing is that effectively also the top 10 investors from institutional investors are accounted for 49% of the market, which is effectively also huge. Also, the dimension that I would like to highlight here is maybe the fact that the type of investors, the small investors, are quite diversified, and we find a lot of new players coming and increasing their investments in infrastructure. And on the other side, they increase also the assets that they have under their management in this asset class. And there are very few, 250 capital seeking funds compared to 4,000 private equity vehicles around the world. But this is really also increasing. And the pro and cons of, as an investor, of investing in infrastructure, is that the infrastructure and product trends tends to remain constant even during slower economic periods, and that it is an investment which is defensive because it is less volatile than other market sector. And then, which is quite interesting, in fact, today, is that these assets are resisting the inflation and the rising prices. And that is a key, in fact, especially in these years of inflation, in order to effectively have safe investment versus inflation. As you know, the inflation rates are integrated in all investments by governments and by authorities, in fact, in the smart city or other infrastructure investment. And then the fact that also the funds are stable and there are lower rate of competition, it means that there is effectively a low cost, in fact, a high cost of development that is putting a barrier to the entry of smaller and newer. So those players are quite stable. For the cons is that effectively we have maybe smaller returns, in fact, from those funds, and capital gain is not really the main story of performance. Is that effectively it is more dividends and it is quite adapted to retirement portfolios, in fact, and this is how it make them interesting. This graphic is just showing that effectively the overall performance of these funds were quite reliable, in fact, during the last years, and effectively have attracted a lot of investors. On the trends is that effectively the mega trends driving growth on demographic and social change around with the rapid urbanization. There is a global economic power axis for geographical expansion in emerging markets. So especially in Asia, the market is really very booming, in fact, on these assets, and also starting in Africa, especially with equity capital, in fact, in those infrastructure. All which is related to technology, in fact, boosting of digital infrastructure, telco, urban transportation, smart cities, IoTs, cloud data center, 5G, AI, robotic and automation also. And also the combat climate changes and resource scarcity, and especially energy savings and climate and decarbonization. So COVID pandemic has further strengthened these drivers and have accelerated, in fact, this shift, in fact, of the infrastructure investments. As you see here, the private infrastructure investment, especially in Europe, has increased and now is 22% of the total investment done in the period of 2010 and 2019. Even if the amount of investment is lower for the Europe and has lowered, the overall room to private infrastructure investment is quite high, comparable to North America, but less than Asia Pacific, where it is 32%, in fact. And all global regional responses to COVID and help that through IRA of each country boosting programs, in fact, and national responses to the COVID will boost, in fact, considerably all those bubbles, and it will be a great momentum for these investments. And in terms of sectors, what we see is that even if social and transport subsector were really decreasing the last years, and if you see the graphic, in fact, you take the social, education, healthcare, social housing were really down. Since 2020, those investments on healthcare, education, social housing have really been complete. The curve has been completely inverted, and the growth rates are now extremely important, especially that the humanity, because of this COVID crisis, has really new priorities, and this is quite interesting. The other zoom I just wanted to make is around the global trends, in fact, of smart cities. So as you see, the investments on smart cities went from $120 billion in 2020 and is projected to be at 240, in fact, in 2025, with effectively topics using disruptive technologies that you see on the right side of the graphic. We were smart healthcare, smart lighting, smart government and environment solutions, public safety and security, mobility, smart utilities, smart building, and smart infrastructure are the main topics. And as you can see it on the graph below, is that Europe will stay a good region to invest in, but Asia is really growing, and emerging continents like Africa are a little bit more financed, and especially today, as I've said, by mainly governments or international institutions, and often in capital and not in debt. The trends that has been accelerating the smart city and the impact of the COVID was more or less positive on all what you see, in fact, on the left side of the slide, except maybe airports or ports or terminal and storage and midstream. The rest, which is effectively all which is related to digital energy, clean energy, and education and healthcare, has really been very positively impacted. And then what we think is that the infrastructure market will evolve, being more attractive in the coming years, with need for financing and asset optimization, where the transformation accelerator, which is the graph on the top of the page, where new technologies, digitalization, environmental transformation, organization transformation, from there, the social responsibility and operational performance will be accelerated by COVID. And this is what's happening today, in fact, in the whole world. And this will be for the infrastructure sector a very, very favorable moment to invest in, and a lot of help from the recovery plans of US and Europe that are there. And for emerging markets, it's really a moment where the leapfrogging will really help to be able to make positive impacts and to those countries. Just in order to give you an idea on a smart city, so these are figures from CBN sites. Major player today, major investor are either American like SV, GGV Capital, or Sequoia and GE Ventures, but also Chinese, in fact, with Sequoia Capital China, Tencent Holdings, and more and more there are some European, in fact, infrastructure funds who are investing in smart cities, but the market is still today Chinese and American. And just to give you an example on what is, in fact, a practical smart city infrastructure fund thesis. So this is an example. It is a fund which is based in London with effectively an investment thesis around continued urbanization, climate change and resource scarcity, development of sustainable communities, and technological advancement and digitalization. In terms of area of focus, and these are examples of what they have funded. For example, in energy and resource efficiency, they funded public street lighting, in fact, smart meters to control, in fact, energy usage. In the field of network grids, they invested in fiber optic networks in cities, in fact, in smart cities, in fact, in the US. They have funded wireless infrastructures, and in terms of mobility, they have in their portfolio smart traffic lights, smart parkings, and data analytics field, which is effectively quite important, smart safety and security, and social infrastructure, in fact, for those cities. And it is interesting to see that effectively investment size now could be for these funds small. If you have a 10 million investment, is not huge, in fact, for a smart city, but they start, in fact, funding this type of project on a basis of 10 years minimum. And this fund, for example, is investing in the OECD countries, and with a lot of PPP concessions and sales and lease back. And they have also effectively a lot of stages, in fact, of operating assets or ready to build assets, in fact, in their view, in fact, of where they have at which stage they can, in fact, invest. Voilà, this is, in fact, this short presentation. I would like to thank you for your attention, and I hope that this has been useful, and I am really happy, in fact, to exchange either by email or by one-to-one discussion, in fact, about this study. Thank you very much.
Yeah, thank you very much, Chiheb. The next is, let's say, an MOU signature with Salamanca University. I would like to invite Mr. John Bavrak on stage for that. Salamanca University حاضر ولا؟ أعطيهم ورقة بيضاء، أعطيهم ورقة بيضاء. Congratulations, Salamanca University and PCT World. This is another step in Sustainable Development Goal number 17. We are going to continue with our session about financing smart cities, and it's my honor to invite on stage Dr. Graham Bright, Head of Compliance and Operations at Euro Exim Bank. Also, it is my pleasure to invite on stage Mr. José María Fuentes, advisor to the Joint Ministerial Committee of the Board of Governors of the World Bank and the International Monetary Fund. And it's my pleasure to invite Mr. Ray Soudah, Chairman, Millennium Associates. So, yeah, our first speaker is Dr. Graham Bright. Sorry for letting you sit and...
Why not? Good afternoon.
Good afternoon.
It's going to be one of those presentations, okay. Buenas tardes a todos. Buenas tardes. Soy Dr. Graham Bright, jefe de complemento y operaciones de Euro Exim Bank, una institución especializada en financiación de comercio.
Everything's okay.
Es un placer y un privilegio dirigirme a usted esta tarde y nuestro agradecimiento a los representantes de Peace City por participar en este emocionante proyecto y oportunidad. Desafortunadamente mi español no es bueno, es muy básico, así que con vuestro permiso hablaré en inglés. Muchas gracias. We'll go in English instead. But I did try, okay? Let's try the clicker. So welcome to the presentation this afternoon. My name is Dr. Graham Bright. I'm head of the Compliance and Operations. It's probably unlike a presentation you've seen before here. It's going to be an explanation because you know what we have to do. You know why we are doing this. You know where we are going to do this. But my presentation is more about how we're going to get there and how we're going to finance this. So let's move this forward. And a quick video of what we do as a bank. So this is just the introduction to us as a bank. Remember, not draining your working capital. That is the lifeblood of business. The range of instruments to help businesses to import and to have the financing to do their business long term. We deal with everything about the containerization, the documents. I'm not going to talk about blockchain, because if I do, I have to put $1 into the box in my office. And that box is getting bigger and bigger, and I never do anything with it. Blockchain, remember, is a technology enabler that we use in trade. Due diligence, absolutely key to the way the bank operates as well, across the whole of the transaction life cycle. It's very important that we know who our customer is, who the end point is across the whole transaction. We're the largest trade finance bank on the planet. We have 12,000 agents and partners in 183 countries currently. A fantastic figure. We've grown that from 3 people when I started in 2015. A round of applause if you like, because that is a staggering number to help your business. Okay, we've seen about the sustainable goals which everybody has, and people are picking out individual ones there. The thing to remember, the common thing about this, is that everybody needs financing for every single one of those key goals. And that's why there is no one solution for this. Every single funding challenge needs a different funding solution. Just remember from the urban dilemma, Lord John Waverley was going to talk about 200,000 plus people moving to a city every day. So that's the scale of the challenge, 3 million a week approximately. Urban population, I said 60 here, we've heard earlier, 70% of the world's population will be in cities. And the result will be, well, you've seen it yourselves in some cities, when our refuse people and collectors go on strike, the piles of rubbish, the insanitary conditions, the cost of moving that is remarkable. So, for our youngster in the audience here, you probably think, well, look at this. This is how Hollywood sees big cities in the future, like Gotham City or Batman. Look at the buildings, lack of light, congestion, rubbish, dirt. We're trying to move away from that. What we're looking at, smart cities, green spaces, fully sustainable, agriculture, technology, manufacturing, all held in the same environment. But how are we going to get there? Because as we said, every single project has one thing in common. It's not just the people, it's how we're going to finance each one of those. And we'll look at certain parts and different projects there. But the building blocks of any smart city are the financing options that run beneath it. So there are different financing routes we've got. We can self-fund, but that's expensive. The debt route through bonds can be cheap. Alternative investments through capital raising can be done through equities. That's expensive. And the financial system can be used as well. That can also be expensive if you're trying to move local currency all the time into dollars. So let's have a look at some individual ones and look at specific areas now of how we can look at specific funding capabilities in each one of those sectors. Remember, building a city takes a long time. As I've been in Africa for a long time as well, and somebody said, how do you eat an elephant? The answer is in very small pieces. Don't look necessarily at the entirety, look at the individual projects which need to be put in place, where each one could require a different funding capability and requirement. So food production will have a completely different funding mechanism. You may not use a debt instrument like a bond, you may use an equity instrument, or local funding to do that, or a local bank may be involved in the whole process. And certainly education, healthcare, and for that, building that social infrastructure, the key point of getting people to the city and keeping them in the city to make it truly sustainable. So there are alternative function options. Lots of things you can possibly do, different people you can go to. We've already heard about the public-private partnerships which are there, with an investor and sitting in the back as well. But these are just some of the funding options available. And this is why it's very difficult to just say one option, a vanilla type of trading environment or a particular instrument that I'm going to use for financing. It's impossible just to say that will do, that's the only one available for me. There are so many different options. Certainly, what people are trying to do more and more is to make sure your business expenses and your working capital works as quickly and as effectively as possible. That is absolutely key to the whole thing. Without working capital, your business is dead. That's why, as a bank, we'll explain later how we do not put that specific emphasis on working capital and allow you to use that through the time and the life cycle of transactions. We talked about smart buildings. What are the funding solutions available there? Well, certainly a local bank can do it, but local banks do not always have liquidity. They don't have the money in their particular vault to give to people to do big international projects. They're supporting local people with mortgages, microloans. They don't want to give things out if they're doing a project in another country. And the cost of that capital is very expensive. So we look at letters of credit for materials and the performance bonds at a very low rate, an acceptable rate, over a long period. So again, we're becoming a partner to the whole thing. Urban mobility, excuse me, people talked about electric vehicles everywhere, building the infrastructure, putting the charging units in. That all takes money to do that, to create that physical infrastructure. I know where I live in London, I can go to a shopping centre. It takes 3,000 cars in the shopping centre. How many charging points do they have today? 10. Impossible. So why do people move to electric transport today when there's not an infrastructure to support it? Infrastructure support is the key point. Right at the beginning of the project, physically building the city doesn't take the time. Physically creating the infrastructure for it takes the time. And that's why it's going to take specific funding opportunities there. Capital raising through bonds, we're talking hundreds of millions, and public-private partnerships where we're involving a government, a company, and a contractor. Really important there for the mobility projects. Smart grids as well, ICT, when we're looking at the innovation, communication, and technology, definitely technology is up there. Governments don't provide technology. Specific companies do that. The fintech companies, they need to be involved in the process as well. And they're not going to give away their technology either. So it's important to understand where it's going to come from, who are the prime partners to work with. Then sustainable digital infrastructure. Here we go with the fintechs, PPPs, the public-private partnerships. And again, loans at a certain rate, but also working with a bank who's used to doing this as well. Remember, not all banks want to be involved in this process. Not all international banks are as international as you think. If you look at the infrastructure around Africa, many international banks have decided to pull out completely. They don't believe it's their market in the future. They may be in the equity market or the bond market, but satisfying a local project in one place is not their particular experience going forward. So specialist banks are the ones required, or those who can provide the specialist financing there. Public-private partnerships, we did talk about this a little bit in the past. There are different ways in which this can work. Again, a PPP doesn't work just one way. It's important to understand the different models that there are as well. Design, build, operate, maintain. Is the government going to own it? Is the contractor going to own it? Is the private company going to own it? How are they going to own it? Is there a joint profit that goes with it? Does all the profit go back to the government? Does the private company keep some? So there are very many different, so build, own, operate, for example, all done with original agreements and specifically regulatory authority. They must be regulated. There must be this framework in place to enable the companies to work together for the long term. Because all these projects are not 5-minute projects. They work much more than that. And once you've built your city, you've got to keep it running. So there's also the maintainability and sustainability of the projects. As a bank, what we do is provide the letters of credit, standbys, the different guarantees, and that's making sure that the contractor does what they're supposed to do, not only the delivery of goods. As we said before, we're now in 183 countries. We've got 10,000 people, 12,000 on the ground around the world who deal with these instruments and talk with the smaller companies and governments to make sure that funding can be in place to do this. I think we're very excited about what's happening, and our ambition, because we're growing so fast, is to be a $1 trillion company. And we believe we can get there within the next 5 years. So we may be the smallest bank you've never heard of, but in time we'll believe we will be the biggest bank that everybody has heard of. So collaboration, wealth building for the customers, employees, and populations, using that world-class technology in blockchain, which is our underlying technology, artificial intelligence, we implemented internally. As customers, you don't need even to know it's there, but we've got it, we use it. So it's very important that you're aware that we're using latest technology to enable you to take advantage of that. And with that, I say thank you for your attention. I know it's a whistle-stop tour through the whole thing, but you're most welcome, and thank you for your attention.
Thank you very much for this brilliant presentation, keynote presentation, Dr. Graham Bright. Yeah, you are seated, but I'm going to invite you to sign a certificate with our president and our chairman,
I'm not worthy.
Mr. John Mavrak and Dr. Riyad Thukabri. Congratulations, Euro Exim Bank and Peace City World. Thank you very much. Our next keynote speaker is Mr. José María Fuentes, advisor to the Joint Ministerial Committee of the Board of Governors of the World Bank and the International Monetary Fund. Mr. José.
Hello. I'm going to
The
stand
floor
up
is
to
yours.
talk. I would like to stay sitting, but the European Cup is covering me. I'm not that big to afford that type of obstacle. So, I'm going to tell you how works the financing of projects of the multilateral institutions, especially the development banks. The projects are strategies from the countries and the international institutions. These strategies are planned and coordinated between the countries and the institutions for a period of time of 4 or 5 years, normally according with the electoral cycles. And they make a strategy to promote specific areas of the economy or the infrastructure or the services in a country. So this is the first stage of the project cycle in a development bank, like the World Bank, Inter-American Development Bank, Asian Development Bank, African Development Bank. So from that point, once the strategy, the general strategy of and the guidelines are set, both teams, government and the development bank, they develop potential projects that can be financed by these institutions. Once they are finished, the conceptualization of these projects, they write terms of reference in order to allow the companies from the countries that are members of these institutions to send offers to be awarded with these contracts. These contracts are made by private sector companies from these countries that are members. In these institutions, we have to say there are two types of members. The countries that are borrowing the money from the institution and the countries that are donating, also known as the regional countries from that institution or the non-regional countries. This when we talk about not the World Bank, but the IDB or the Asian Development Bank. So the borrowing countries, they donate to these institutions because they want their companies from the private sector be able, have the capacity to send offers, to bid for these contracts. In other cases, if they are not members, they cannot do it. So how it works, the financing? The financing is based mainly in two, there are more vehicles, but mainly two vehicles. Sovereign guarantee loans, that of course has a better conditions than the private sector bank. And all the institutions has, let's say, a private sector window where the private sector companies can go and join. In World Bank, we have the IFC, International Finance Corporation. In the IDB, there is the ICC. Each development bank has its own branch that finances directly the private sector. And normally, they can go up to 40% of the amount of the project. They normally partner the company, and they make a joint venture or they have shares, but with a short-term exit in terms of investment. But the biggest part of the financing from multilateral institutions are the sovereign guarantee loans. So they are loans that are taken by the governments, they are guaranteed by the state, and they have a better conditions that the market can give them. These loans, they have to be returned and they pay an interest. The development banks are banks. The World Bank is a bank, and when they give loans, they have their return. In other case, they cannot survive, only foreign donations. These loans are strictly linked to a project that has to contribute to the development of the country or the economy in a sector or a specific service. Projects in any sector. We are not talking only about the big projects of infrastructure that we can talk, especially in this Congress that we are talking about the smart cities, but services, modernization of a state, health, education, everything. Everything fits inside the sectors that can be financed by these international institutions. So these projects and this financing comes aligned with a development purpose. This means that they can comply, they have to comply with all the Sustainable Development Goals. Internally, all the institutions, they have sectorial and operational official policies that the countries has to comply. This means that there are a lot of, let's say, bureaucracy, and it's difficult for a lot of countries and for a lot of companies bid for this project and develop these projects. We have to realize that a project cycle normally is between 2 and 9 years, depending if it's a big infrastructure project. It could range from the country strategies to the finalization of the project can last 8-9 years. So it's a long process. Not all the countries want to take this way, so they finance the projects with the normal markets, financial markets, or the multilateral institutions. Of course, the multilateral development institutions only can give financing to developing countries, and in different conditions depending the group that they are included, because the level of development of each country is different. You have from nearly developed countries to the countries that are called the least developing countries. So the bank conditions of that loan is different depending the country. So once I say this and we see how the multilateral institutions finance this project, of course, Salamanca is not part of a developing area, a developing region, but it has also its opportunities with the European institutions, especially the European Investment Bank that could finance this type of projects. Europe is organized in different areas depending the developed level that they have. And areas like Castilla-León region, where Salamanca is included, they have right now a priority 2. They lost priority 1 years ago, but they are coming back again with the crisis to the priority 1 because they are losing population for many years, and the crisis hit some areas like this with more energy. So still Salamanca project can host, let's say, supranational, not from the development banks, but supranational financing. And of course, all the projects from all the countries that are developing countries can have this financing. To know how they work with more details, anybody can go to any of the websites of these development banks. And when you click in the projects or in what is about the institution, you will find the best to know how it works is to find the definition of project cycle and how it works. So I see that I have 5 minutes left. I would like to wake up Christian and offer him to give me a question or any in the audience, because I believe that you have been not participating a lot. So if anybody has a question about how it works or how it could help these multilateral institutions for his country, be open to make a question.
You have a question from the
World banks have hybrid funding mechanisms with both private companies and state.
One second. Allow me to have because I cannot hear you from here.
Thank you very much. Can the private companies that have projects collaborate with state bonding agencies, state sovereign wealth funds, in addition to these XM banks and the World Bank, that sort of thing?
Yes, the thing is, as I said, all the multilateral banks, they have a private sector financing area. So they can finance directly the private sector. And because by regulations they can go up to 40%, is absolutely necessary. If you want to finance all the project, you can collaborate with IFC or ICC, depending on the development bank, but you will always need an extra financing. The good thing is about collaborating with these multilateral institutions is that normally people who owns the project are going to manage the project. They go first to institutions like IFC, and when the IFC approve it, it's extremely easy that a private sector bank is going to give the rest of financing, because to be approved by the IFC, that is part of the World Bank, for example, you need to comply with a lot of internal regulations instead of environmental issue, social impact, and governance. So immediately that you say that you already have 40% of the financing, any bank is going to run after you to give you the rest, because it's a done deal.
I have one question.
Okay.
officially invited us to...
I don't know. You can hear him?
Can I speak? Oh,
Yeah,
now you can hear me.
No.
Okay, thank you. So my question is about Iraq. Our friends from Iraq are not here, but we have been officially invited to consider a peace city in Baghdad. And would the World Bank consider, in the current conditions, financing or co-financing, of course, such a project? We all know that Iraq has oil, so they have the ability to reimburse their debt. But my question is, should we consider this, let's say, opportunity in the short term, or should we wait a little bit?
No,
Thank you.
the multilateral institutions, they can finance everything. What we have to realize and that every project that we present in the private sector window, let's call it that way, it has to be in the line of the country strategy that they have for that country. I mean, it has to be included because the funds are approved for that according with that country strategy. So any company that wants to be financed directly, they have to check first which is the country strategy for that specific country where you can locate your project, and if it's aligned with that country strategy, you can go for it. Then the conditions depends, and especially countries that after conflict, it changed a lot. Maybe the conditions are better or are worse, or we have to wait. We have Ukraine now. There are a lot of debates and dialogues in the boards of the international institutions, but let's say that we are waiting to see how this come out, in which situation, because you have to understand that the board of these multilateral institutions are ministers of economy or foreign affairs from each country. So they care a lot about the geopolitics.
Yeah.
And they will not approve center scenes in certain circumstances. 12 seconds.
I think we are done. Thank you very
Perfect.
much. Perfect. Congratulations to José. I think our last panelist for this session is Mr. Ray Soudah, Chairman, Millennium Associates. Mr. Ray Soudah,
Thank you.
the floor is yours.
Thank you very much. I think we have a presentation, some of which will be skipped. Good afternoon, everybody. My name is Ray Soudah. I'll give a small introduction about our organization and what we can do to work together. We are in our 23rd year of independent existence as a private advisory firm, financial advisory, corporate finance, and fundraising for the financial industry and also for entrepreneurial events like projects and hopefully smart cities. It's very important to know that we are private, but obviously we work around the world, based in Switzerland and the United Kingdom, but the projects are all over the world with all kinds of exciting counterparties. We are not part of any bank, we are not part of any government, we are not part of any club, we are just private people helping others do their business and in the process get rewarded. So it's a pleasure for us to consider working with the Peace City World, with the new captive insurance company that's being created, and hopefully also the new specialized bank that's being created. In particular, these are very critical parts of any business development that might take place in not only in Salamanca, but all the other countries that are in the pipeline. So this is very exciting, even though it will be some years before we see the result. But as it was mentioned earlier, piece by piece, bit by bit, rather than wait 10 years and see the result in 10 years' time. Start tomorrow, don't delay. A few points. Some of the things that we could work on are mentioned here. For example, floating wind parks, energy sectors, battery storage, real estate. These are the kind of things that would be natural in a smart city or a peace smart city. And so we are familiar with these matters. Obviously, there's a lot of money available in the world. It is quite astonishing how much money there is actually available in the world looking for good projects. The projects have to be successfully planned, and it has to be profitable for everybody, but there is a lot of funding available as long as we can define the purpose, the timing, and recognize the quality of the project. There's a lot of money available. Our role is not a principal, but to organize and to give advice on how this can be arranged and which projects should be internationalized and supported. So this is a very important launch of the first Smart Peace City, because if this goes well, especially the immediate projects, this news will spread around, and then the rest will follow almost automatically. We just need 2 or 3 good examples, after which we will all be very happy. I don't think I need to explain what is the fundraising or corporate finance to the community here, but just to mention that this business of helping projects get off the ground and come to a conclusion is a global business. It's not related to Switzerland or London or Tokyo or wherever. The funds are all over the world, even though they might be distributed through one or the other channel. But the world is one world. The money stock of the world is one world. And there is a lot of money at the moment sitting on the sidelines, waiting for sustainable projects, smart city projects, infrastructure projects, and the like. And so there is no shortage of money, whether it is in combination with the World Bank or other institutions, or in isolation as private money. The most important thing is how to get it organized, and how to get it insured, and how to get it banked properly, and how to get it monitored properly, so that there is a successful track record to carry on doing it more and more times. So even if it's in Spain or in Tunisia or in Iraq in the future, the funding source could be from the other side of the world, and it could be through various intermediary institutions coming in. Everybody has to succeed. Nobody is in a charitable position. Maybe some terms are more favorable than others, but at the end of the day, we all have to succeed without losing money, and we have to make money in order to be able to continue to support the companies. We are, at the end of the day, a commercial operation, whether in some form or another, subsidized. It doesn't matter. So this is very important, that people should not expect handouts, but they should expect to work in partnership and come up with win-win situations. It's very clear that some of these projects are quite huge, hundreds of millions, and others are small, 10 million, 20 million. For me, that's a lot of money, but for the projects, that's very small. For us, it doesn't matter. We don't mind about the size of the project, 10 million or 1 billion. It doesn't matter. If it is bankable, we'll go for it and try and make a success for the enterprise in question. And as I've just mentioned, money comes from all over the world, not only from financial centers like Switzerland, where we are based, or London, but it's from all over the world. And the investors these days are obliged to show that they are helping initiatives like this, smart cities, green cities, whatever way you want to label it. But let's say enterprises for good, for doing good, which are also profitable. So it's almost fashionable, even if the intent is just commercial, but it's almost fashionable to support this kind of initiative right now, even though we want to do it because we believe in it, and we like it, and we think it's good, but it's also almost obligatory for many investors to show that they have a certain allocation to this sector. And I just want to show some of the examples of things that have been done. This is not really important. I will just switch it off. I don't know how to do this. There you go. The important thing I wanted to say is that there are people, there are funds available, there are investors available that will help these initiatives. And if we are allowed, we would love to partner with Peace City World, its future bank and insurance company, and of course the community of projects and entrepreneurs and world institutions that are providing backup support. So it's a pleasure to have been invited here today, and I want to give the time back to the management to take care of it.
Thank you very much, Mr. Ray Soudah.
Thank you.
That was great. Actually, listening to you, we feel like it is very easy to get money for the projects, so that's great. Our next session, I don't know if we need actually a break because we are a little bit late. So let me thank you very much, dear panelists, for contributing to this second session about financing smart cities. And we will continue on the next session. Thank you very much.